How's it going, guys? I'm going to take a quick look at the charts. So let's discuss two things, which is the important part. So all of these videos are follow-ups from previous video, right? So if you want more context of everything that's going on, you need to follow up with the previous videos so you understand sort of the red thread that's going on, okay? So two things that is important to understand here. So is that one, when price fails to drive lower, okay, so that means that you either have a consolidation sideways, something like this, or if price is, sort of going sideways, so like that, okay, and very low liquidity, it doesn't really matter. But if you have a region of price, of proximity, right, a region of price, and when price really fails to drive lower, okay, and when I mean fails to drive lower, it needs to be something significant as weaker price action, then you're having the weekly open. It can be into data points, it can be post data points, it can be into close, into whatever, okay? So the point of this is that liquidity is sitting at a certain level, okay? And when it fails to drive higher or lower, then liquidity is forced to go into the opposite direction. And the thesis behind this is that the order book, right? So you understand that price is a fact of the order book. So if the order book is depleted on the one side, meaning that there is no chance for it to move lower, and once it reverses, it shows that the book is stacked or is heavier on one side than the other, right? So one side, it doesn't need to be there is a lot more buying or a lot more selling. It just means that the weight of it is higher on one side, okay? That means that it is forced to drive in the opposite direction, okay, until it finds a new pocket of liquidity, okay? And a pocket of liquidity can be a first previous highs or the previous consolidation into that. It can be into a higher consolidation, right, and it forces higher. But we use the same concept, meaning that it needs to be into data point, New York open, weekly close, weekly open, okay? And you're having the same concept go on and on and on, all right? So that's one thing. The other thing is that we're having just a weekly open, meaning that we're having weekend liquidity, London open, New York markets hasn't really opened yet. So expanding into a New York open for a weekly open for equities can also cause a liquidity crash. Okay, so that means that price moves into that. Okay, and once that opens, you give it all back, right? Because price is forced to move into levels where we're seeing liquidity. Okay, it doesn't matter if price is bullish or bearish, but we're just trying to make the best out of what we're seeing of price action. Okay, so as I mentioned previous week, is that I wanted this here, right, to do the opposite, right, to move into this level and then see that expansion. Now we didn't see that, and instead we held, okay, and they tried to move lower right there. And once that failed, and you had that close, okay, so you're having these two bars failing to drive lower, and once you reclaim this level, you just have to assume that the draw on liquidity will be either short-term highs, medium-term highs, or longer-term highs in proximity of this 4-hour level, okay? And then you can also move into higher time frames, right? So, such as the 8-hour, look back into the larger part of this consolidation and say, okay, so it seems like price is now attracted towards these highs, okay? So if we assume that a price is attracted now towards the 70,000 and these highs, for me, what that says is that on a weekly basis, right? So if you look at the candlestick formation areas that you're having, the sell-off, too bullish, okay, and then you're having indecisive candle right there, and which just symbolizes sideways price action, okay? So these two candles, give me 1 second, let me take off this stuff right there, okay? So these two candles, okay, so the expansion, the wick, and then back down, the wick, back up, and then you're having the body close, and then you're having the weekly open. This is just a range, right? So this, right, this and that, this is sort of a ranging price action. If you look, of course, as we saw on a PA perspective, when you're having a small body candle, it means that most of the time price is just kept in the middle. Okay, so when you're having that weekly open, price extends and starting to trade above that, we can assume that maybe we're going to see a bullish formation of that, right? So that means that we're having an assumption now that potentially this weekly candle can be an expansion candle. Okay, so expansion candle will be, if you look at this consolidation, okay, we have to sort of assume that potential bullish candle forming like this or whatever. Okay, and then you can have another indecisive candle with wick, and then maybe, you know, something like this, right? But it doesn't really matter, but I want you to understand the point of this, right? So on the other hand, if this now candle fails, right? So if we're starting to sell off this week, either today, tomorrow, into New York session or whatever, that means that the upper body of this, right, of the open will just be a wick. So whatever you see right there, this will be a wick, right, and the body will start to be red below it. Okay, that will be the bearish case, and then you just have to abandon longs and understand. Okay, so the drawn liquidity, then if we are wrong on the upside, the drawn liquidity will be lower. Okay, so that's sort of the most simplistic way I can explain it, and I think I did a good job on that, in my opinion. Okay, so if you look here on in terms of signals, there's not a lot of signals. Bullish price action, there's nothing bearish whatsoever currently seeing. Okay, it looks like a reversal formation, in my opinion. So you see the reversal on the 1 hour, 4 hour, 8 hour. The daily looks good, and now we're starting to trade above on the weekly. Okay, so that looks good overall. So back to a quick look at S&P 500. So we had this sort of price movement yesterday. Okay, so look at this, right? So you have a double on the 4 hour, we have a double bomb signal with the hill, okay, which is, and then we had some smart money coming in and some bullish divergence. Okay, this is, but keep in mind this is the 4 hour. But usually, so if you look to the left here, even though the movement was much more extreme, so you had a larger rubber band effect with a lot of bullish divergence, right? 1, 2, 3 bullish divergence with a lot of smart money. Even though this is a lot smaller, you're having more signals, right? So these bomb signals, the green color is the how much extreme we move away, not in a range, but the price moving from this high to this low. The more we move lower without any significant retest, it makes the green larger and larger and larger. Okay, and then the longer we stay sort of oversold, the longer it will be. Okay, so we didn't see that this time as we did previously, but it's very sharp here, as you can see. Okay, so it's actually pretty high, in my opinion, compared, right? So we had a 58, the previous was 76, right? So it's a lot larger, but you're having 2 bomb signals and 2 PA signals as well. So these bomb signals is basically shows, let me just check here for reference. Yeah, so you're having this this reversal candlestick formation, which is this sort of engulfing or this hammer, okay? But after that hammer, we actually had a massive sell-off. But after that larger sell-off, we actually had a new reversal, which is this candlestick, right? So these 2 candles represents these 2 bombs on the signal. Okay, so in terms of candlestick formation, this is very extremely bullish, and we also have some green heel on the 4 hour. Okay, so I'm happy to sort of assume that this is a strong reversal, showing that more buyers are present at lower prices. Okay, so I think it's a strong signal to the market that, you know, we want to continue upwards. Okay, so it doesn't mean, I'm not saying that we can't move lower, but of course, you know, and even if you look at on an 8 hour here, like this is a very strong and it's sort of what was called, like the chart is really telling us that this 8 hour candlestick is extremely bullish. It's as bullish as it gets. So if you look to the past, you can see that this is a good example of that candlestick, right? But keep in mind that we can also reverse it, as you saw, right there, right there as well. We can reverse it. Okay, so I'm not saying that we're out of the waters just yet, but generally speaking, this is a very strong candle. And if you look at these candlesticks that show that we reversed, we didn't have any engulfing price action. Okay, so we basically engulfed 1, 2, 3, 4, 5, 6, 7, nearly 8 days, right? So this is nearly a weekly engulfing price action. Okay, so if you look at that week, so the objective this week for S&P would to reclaim sort of these bodies on all-time highs, right? So if you see that, so we will see how that unfolds, but for now, until we see something different, we just have to sort of assume that this is a statement from the bulls that we will continue higher, right? And then take it from there. And the same, let's check NASDAQ, the 4-hour. We have one signal right there. It looks pretty good in my opinion, not as strong as the S&P. 8-hour candlestick, bullish, extreme, weak, right? And then on a daily as well. I think this looks good in my opinion. Weekly, not so good, but that doesn't really matter. So we will see. Okay, I think we have a good case. The dollar chart doesn't really matter because we're stuck within a range. I don't think we will really move for a pretty long time unless something fundamental changes, right? So I think we're gonna just stay within this range, right? So you're gonna be a very tight range. So the extreme side of the range will be this consolidation. That will be the extreme side of the range, and that's not even a lot, right? And then I think the bullish side will be then this, right? So this is let's just double cross reference. Is a 1 to 2% up, 1 to 2% down. Okay, so I think that's the most significant price move we're going to see from the dollar chart for now. Okay, and I think you're going to be just stuck within this range, to be honest, for a long time, right? So I think maybe a bit lower, bit higher, and just I think volume of vol is going to just decrease even further, and then depending on fundamentals coming out from Federal Reserve or whatever, if you're going to get a move like this, or later if you're going to get a move like that. Okay, so I'm actually leaning towards seeing no liquidity into sort of August, and then seeing a spike, and then coming back down, something like that. I think this makes the most sense for my imagination, because keep in mind, this is not TA, is just imagination. Okay, and the reason for this, I think, because the dollar needs fundamental driver. We don't have a fundamental driver. When I say fundamental driver, I mean a surprise to the market, to make market participant do something, right? So you want to have a reason, right? So at the moment, we don't know when we're going to exactly, we just think when we're going to do the rate cuts. We don't know if we actually will do it 100%. We're having some okay numbers coming in terms of inflation, okay? But I think into the summer months, you might get rate cuts maybe postponed again, not because just as an imagination, that that this takes a bit longer time to get going, and maybe the Federal Reserve want to be on the safe side, so they just want to keep these rates at these levels. Okay, so I think maybe then we might see a spike in dollar to take out all these dollar shorts. Okay, and then as we move into September meeting for the Federal Reserve, they might pivot again and be very optimistic. Okay, and then you're gonna see the main move for post summer, meaning from September, October towards the March, right? So I can see, and this is sort of based on seasonality for price. Okay, and I use that to combine with my imagination of maybe what is going to happen. And also keep in mind that the formation on the dollar chart is actually bullish. It doesn't mean that we have to we don't have to make a bullish outcome of it, but I think this looks pretty strong, to be honest, right? So this, I think, sorry, I think this looks kind of strong and that I want to drive up, and then, you know, I think that's sort of my main thesis. Okay, we will see how things. Okay, this is just an idea, just something to keep track on, and just to post to explain how that will look like for the Bitcoin chart in terms of price. That will maybe do, you know, we stay here, we move up towards these levels, then nuke, okay, and then make some kind of a larger sideways consolidation at the end of the day in towards October, okay, and then see a massive expansion away from this. Okay, so, you know, this is a bit too long of consolidation. Just want to point out, I think that we might go up in towards the 80K mark, or try to move towards 80,000, then sell off. But we will see, okay, how things so forth. So a quick look at some of these altcoins. You know, it's a tough nut to crack. We're still just doing, you know, this lousy price action. So let's just do a quick overview. You know, if this holds, you know, I think we're gonna be bullish. You know, AVAX, I think it still looks good. Give me 1 second there. So let's just do on the weekly here. So on the weekly as well, you can see, even though we're having some bearish price action, it seems like we're sort of trying to create a bottom, right? So if you look on the weekly, on a lot of this, we're just within the exact same consolidation, right? So, and I think that's important to note. We're just in more or less the same consolidation. So we're trying to make something bullish, but I don't see any major things going on, to be honest, right? I think we're either forced to do a larger correction or just continue, right? So price will just slowly be forced. But the thing is that a lot of these smaller coins, sort of Rose, Algo, TIA, Apt, Dot, ARB, these looks pretty good, right? It looks like we have potentially formed a bottom on a lot of these ones. So, you know, something like this. So the thesis here is that further sideways, then up, and then meaning that the leading coins such as Solana, FTM, they have to lead this, right? So I think overall we look good. To be honest, we look good, and let's just see how things unfold, right? Let's be very open-minded, and let's go back to the main idea that seasonality says that summer is dry, it's sideways, it's difficult, okay, but it can expand because we have very low liquidity. If you want to be confident and trade long spot with confidence, you have to use seasonality in terms of August, September-ish, July, August, September, sell-off trend from end of September towards Christmas. Around Christmas, we have a small dip, then continue uptrend until May, okay, or March or something like that, within those months. That's the seasonality, and you have to use that, right? And so if you miss it, you can't come into May, March, or June and want to long and want to see price just move up. It doesn't work like that, and you will get shattered. Okay, use the tools that we have and try to make the best out of it. Okay, guys, let's talk later. Peace out.